Well, there's no stopping the bulls as Dalal Street gains for the fifth straight week, its longest winning streak since December 2023. The Sensex and the Nifty rose 1% while the mid-caps outperform. Hello and welcome to the Editors Roundtable. Over the next 30 minutes, we decode the market action and put the spotlight on IT stocks. I'm Sonia Shenoy. With me, Nigel, Nimesh and Prashant. Also, I have Harish Bihani, who is the Senior Fund Manager at Kotak Mutual Fund, who is joining us today. Guys, what a week for the market, right? I think the cherry on the cake was India's win at the World Cup, T20 World Cup, and it was sort of poetic, right? After India won, the market continued to go up. So really, it was a day that belonged to the week that belonged to the bulls.
Yeah, absolutely. I'll share some interesting data towards the end on the World Cup wins and the market returns. So let there be a bit of a surprise towards the end. But yeah, I mean, it was a good thing that finally we won the World Cup 2020. And what a crowd yesterday, right? Yeah. I mean, the amount of people who came down to just cheer the team, it was an amazing, amazing thing to watch. So much of people coming in, so much of people cheering around. And the whole team was so much excited to party and all. It was like one of those superb events to watch.
Yeah, that's right. Nimesh, I'm going to be waiting by for those data points. But, the markets behaved like how the Indian bowling team was, we did perform. The spinners didn't perform, the fast bowlers performed.
Yeah.
Hardik wasn't performing. He came and bowled a splendid last over. Bumrah was very, very good.
Somebody or the
other was chipping in. It's like the bowling attack. And ultimately, we came out trumps. So, cheers to that.
And I think it's like a T20, right? I mean, every day is like a... Actually, markets are like, I mean, especially when you report on markets, every day is like a one day. But I think it's the pace is quickened, the gains have quickened, everything is happening so fast. And let me just actually put some data points out, Sonia, because today marks exactly 1 month since that election election results day, right? 4th of June was when we got the election results, and it's 1 month. And it seems like a distant memory. Because not just, I mean, the verdict itself, but also where we were in terms of levels. So the changes will come up on your screens. Nifty is up 11%, in the last 1 month. The Bank Nifty is up 12% in the last 1 month. The mid-cap index is up 16% in the last 1 month. The small-cap index is up 20%. And the micro-cap index is up 24%. So as you go down and down and down, gains keep getting bigger and bigger. I mean, from large caps, you go down to the sort of mid caps, to small caps, to micro, gains are larger. And that kind of tells you something about the kind of market that we're in. Sectorally as well, same 1 month return. This is all, by the way, not from the lows of that day when the market had that, Nifty fell 1,700 points, but from the close. CPSE index 18% in the last 1 month. That's public sector stocks. IT index 17%. Real estate went up 14%. You had oil and gas up 14%, and you had private banks which went up 13%. So this is, quite amazing to really sort of look at and behold. And what to watch out for, we know there's been earnings, and IT will be first off the block. Stocks have rallied. Budget, we're still waiting for a date. Will it be the 22nd? Will it be, in that week? Sometime that week we'll get the date. Positioning is clearly one-sided. And I think we've been highlighting the fact that one of the data points in that sense is the FI positioning in index futures, which is now close to about 4 lakh crores or so. All of this also means that the hunt for new ideas, Nimesh, and we've spoken about this, is manic. People are acting on, just names, and the first time you hear something and next you look, the stock is up 10%, 15%. That's the kind of markets. What I just quickly did, Sonia, is looked at the new initiations in this last 1 month or so from brokers. It's actually, and it's always like that. It's not the foreign guys, but it's the local guys who are more clued in. So Goldman, I think, is the only large foreign broker who had those initiations. We discussed some of this, TBO Tech and Mapma India and Uno Minda. But look at Spark, which is South-based broker now, of course, part of Avendus. They initiated on Tips Industries. They initiated on Prudent Corporate Advisory. You look at IIFL Equities, NetWeb Technologies, J&K India, and I'm only highlighting things which are not well covered otherwise. Kotak initiated, actually, Kotak JB Chemicals, I think it's well covered, Coforge, Amara Raja, etc. BNK initiated on Archean Chemicals, Vinati Organics, Axis, TBO Tech, Novama, BKG Foods, Medi Assist, and somebody like Incred initiated on MTAR Tech. It's not an exhaustive list. I mean, there are many others as well, but I think it just shows you that people are sort of hunting for ideas. They want newer names because, what is already out there, what is already well known, is kind of juiced up quite a bit.
But it's interesting you say that, because then that brings us to the next question. Is this a market that has reached a euphoric level, right? Is there any kind of froth that's building up? And let's actually pose this question to Harish Bihani. He's joining in on the show. Harish, thanks so much for joining us. It's been relentless, the rally, right? I think post-COVID, we haven't seen any major correction in this market, which also is kind of brings a little bit of caution to the table as well. Have we reached euphoric levels? Is this a time to start getting a bit cautious, or do you think the run is something that can continue?
I think a couple of points here. First is that a market is euphoric or not has to be thought through in terms of the business cycle, earnings cycle, capital cycle, and the behavioral cycle. So when you look at the business cycle, earnings cycle, and the capital cycle, it's in favor at this point in time in India. And when you look at business cycle, you look at profit to GDP, we're somewhere in the middle. We peaked somewhere in 2009, then it took 10 years for us to form a bottom, and then we started inching up from there on. So we are moving up as we speak. We are somewhere in the middle of that profit to GDP cycle. You look at the net debt to equity for corporate India, it's at a 15-year low. You look at banking balance sheet, it's extremely good at this point in time. So many factors point to a robust business cycle. We'll have to see how it shapes up over the next couple of years, but it seems very benign at this point in time. When you look at the earnings cycle, it's fairly steady. Earnings are coming through for large, mid, small cap companies, supported by the business cycle. In terms of capital cycle also, it's not that every sector, a lot of companies are chasing or there's too much competition in all these sectors. So which is also helping the earnings cycle. Lastly, the only worry that we have when we look at the markets is the behavioral cycle. You look at how market participants are behaving. That is something, and you pointed out in the initial part of this particular program, how markets have moved up over the past 1 month, 2 months, 3 months. That is something, and when you look at the IPO market, when you look at promoter selling, when you look at the private equity selling, that's something that should make one cautious. That said, on balance, things are moving in the right direction. We'll have to move ahead, but with caution.
Harish, as even Prashant pointed out, there was a big rally in the mid-cap and the small-cap indices in the last 1 minute itself. And actually, Kotak has now resumed the subscription in the small-cap fund. What is your take overall on the small and mid-cap, and how far you see the opportunities in that particular space?
At the time of closing too, we had a dilemma in my mind because we thought through in terms of business cycle. We were fine in terms of the business cycle, but when you thought through in terms of evaluation, it was slightly on the higher side, and we thought through on the event that was about to play out. So we thought through that, why don't we take a fresh call post the event playing out? Now the event that we had all waited for has played out. It seems that we are well poised in terms of the business cycle, and that is why we reopened our fund. In aggregate, when you look at the valuations of mid-cap or a small-cap bucket, it's on the higher side. It's 20-25% higher versus previous highs. That said, we have to think through in terms of how the cycle is and how the cycle is going to behave over the next couple of years. That's one. Secondly, as I spoke about in our earlier meetings too, that when you think about India's journey from a $3.5 to a $10 trillion, there'll be many small companies which will become very big in size over the next 3, 5, and 10 years. So the entire effort that we are putting in today is to identify those ideas, those themes that will become very big in size as India becomes big in size. And there are opportunities all across. Maybe we'll have to live through slightly higher valuation for that compounding, which will come over a slightly more elevated period, which is what we are telling all the investors too. That look, when you come in the market today, you will have to have a much longer time horizon versus earlier. You can't presume that the returns that you made in the past 1, 2, 3 years, you'll get similar returns in the next 6 to 12 months. Maybe you'll see a time correction, but that's a healthy correction for the market. That should happen, whether a time correction or absolute correction. It might happen at any point in time. It's very difficult to forecast. That's a healthy correction as a part of the overall cycle that we are playing in at this point in time.
Okay, all right, Harish, we'll come back to you in just a bit, but we want to talk about the IT services space, because the street is turning optimistic on IT companies, and the question is, valuations are re-rating, or business is also going to look up. Nigel, you've put together some data.
Well, that's right. Contributions coming in from REMA, obviously, that's been covering a lot on IT in the last week or so. So let me go across to the wall and, in fact, cover this space. The street is bidding up the IT space, and there is optimism building in, but are they making something out of nothing at all? Well, that's the question out there. But if you look at the stock price, you look at what the index has done in the last 1 month or so, well, clearly, the IT space, has outperformed. And that's the reason why, in fact, the street believes that maybe Q2 is going to be quite good. From Q1 onwards, we'll see a recovery. So let's run you through a few data points. First up, in the last quarter, at the end of last quarter, various brokerages went ahead and they skimmed down their estimates. And UBS, the chart should come up for you on the screen. FY25, FY26, well, they went ahead and they cut some kind of, guidance in terms of what they were estimating. But the question is, was that the end of the downgrade cycle, and will things look up from here on? The street is basically focusing on 3 parameters, and that's why there is optimism that's building in. And these are inputs coming in from Kotak. They're seeing that seasonal strength coming back in, large deals ramp up, that's possible, and also there could be a reduction in intensity of the cuts that we saw, particularly in discretionary programs, which in fact will bode well for it. So that's important as well. Brokerages, well, various came out with notes this week, and we had the big double upgrade coming in for CLSA. On Wipro, they increased their target price. They said operationally things will improve. They also hinted that there could possibly be a buyback as well. So that was on CLSA. Nomura, they turned positive on the sector on the whole, while Jefferies as well as UBS, they're being very, very selective. And one of the reasons for Jefferies to be selective is they are highlighting that valuations, well, they're at a premium in comparison to its 5-year average, as well as if you compare it to what the Nifty is trading at. So Jefferies puts out that the Nifty IT index is trading at a 28% premium in comparison to what it normally trades at. Now, if you just look at the chart as well, you'll see that on a valuation basis, in comparison to its 5-year average, it's trading at a premium. But we spoke to a couple of analysts on the street, and they said that maybe this premium will not appear as much because there could be surprises on the margin front. So put all this together, the street is bracing for brighter prospects, but will it come about? Let me put a question to Harish. Harish, what's your view? The street has clearly turned very, very optimistic. The stock prices are telling us that. Do you concur with this optimism, or do you believe there still could be some pain in the near term?
I guess on average, things are looking slightly better for specific companies in this particular sector. And this is a very unique sector wherein people take call on how near term is going to shape up. There are companies which will report better numbers in this particular quarter, and you've seen some sharp uptick in share price for those companies, and vice versa, companies which aren't reporting or which aren't likely to report better numbers, you've seen their share price stagnate. So that's more near term. But when you think about slightly medium term, there's still this dichotomy of when the rate cuts is going to happen. Fed is going to cut their rates. Secondly, we're still unsure how US economy is going to behave given the slowdown that we are seeing at this point in time. So there are bulls and bears argument at this point in time. On balance, there are companies where growth is going to be on the higher side, which is where we are focusing on, where regardless of how macro shapes up, the overall growth will be in double digits, and that's where we are investing at this point in time.
Right. So Harish, going by what you're saying, are you tilting more towards the mid-cap names rather than the large-cap names, because they could outgrow what the larger caps are doing?
Yes, we are tilting more towards the mid-cap names. We are looking at the mid-cap bucket. We are looking at niche companies, whether it's in the ER&D sector, whether it's in the pure IT services. Some of those are growing ahead of the larger cap companies, and that is where we are focusing on. In some cases, valuation have moved up very, very sharply in the past 1 month, but on average, there are still opportunities around today.
Okay, well, let's do one thing. Let's take a quick commercial break. We continue to decode the market action and also tell you the kind of returns that markets have seen every time India has won a World Cup. That and more on the other side. Stay tuned.